Hello, this is Solomon Davis, Right Side Trader. Today I'll be going over my 7 of 7 of the SPY trade, but this week I had a loss. So again, this is not a trade recommendation. This is all for educational purposes only because we all know trading is risky. You can lose money at trading, and I did this week on this one particular trade. And that let's also let you know that no strategy is 100%. Because you're not 100%. I'm not. Let me just say, I'm not 100%. I can make mistakes. I can trade on days that I probably shouldn't be trading, and that's what happened on Wednesday. Uh, I shouldn't have been trading probably that particular day. Other things were going on that day where I should have just stepped away from the computer and stayed away from the computer. But I wanted to be consistent with what I was doing. So I forced it, and I ended up having a loss. Really a pretty big loss and all, based on the position size and based on the account size. Really not that big, but as you can see, you'll see that everything really worked out. But again, please check with your financial advisor. Please check with your significant other before endeavoring into trading. Let's jump right over to the charts. Jump right over and let me show you what I did. Okay, on Wednesday, I waited like I normally would wait, 9:35, getting in the trade. These are execute times. As you can see, I jumped in right at 9:35. So that's not normal for me. I jump in before, I wait, and when we see the chart, you're going to see things were all wrong. I was in that trade almost a half hour, over 25 minutes. That also lets you show you that something wasn't quite right. And if I had these before, but I usually I would, since in this particular account, this is another reason why when I talk to people about day trading, I usually try to tell them, if you're going to try this or you're trying to learn this, do it with a small account. Do it where you only have so many trades a week. And when I say small account, I'm saying $3,000 or less, because that's all you can write off from the tax man anyway. You can write out more if you're a professional trader, but you probably shouldn't. If you want to write off more and you want to put more in there, you're going to end up writing off the whole thing. Put $1 million in, you're going to probably lose $1 million. Because again, this is so much that you need to learn, so much you need to understand before jumping into, especially into day trading. So it's best to start with that small account and learn to practice, get good coaching, so you realize what's going on and develop a strategy that works for you, not some strategy that it works for them, like work for me. I usually like working with people and let's see, okay, what works for you? Let's see what you see. Let me get you to see what's available out there. Those type of things. But let's get back to over here to this. Small trade here, small loss. Another trade here. Then I ended up trading Apple. The reason for me trading Apple and what I saw on Apple had reached a high. And then the following day, it actually dropped and dropped pretty good. I was expecting a drop. So that morning, I was expecting to pull back some of that drop. So I ended up playing Apple long. This morning, the Russell, I'm very familiar with the Russell. The Russell gets stuck in a range, and it's easy to scalp 10, 20 cents on a Russell trade, even on an expiring option. Again, do not trade expiring options. Do not buy expiring options. Expiring options is just that. They're expiring, and they're probably going to end up being zero by the end of the day. You will lose 100% of your money. But me trading, as you can see, that's 10 contracts though. Again, I bumped up because, again, you get to where you want to make your money back that you lost before. So you want to I look at other things where I know I can probably make the money back at. But that was the trades. Now let's take a quick look at the charts and let's get this done. This day right here, like I said, this is what I saw on my 5-minute chart. I saw this thing going up. I was kind of expecting it to go up and go higher. So like I said, I ended up getting in on this particular candle here, and this thing ended up doing nothing but going down. And I hung in there, and then I just got out of the trade because, again, it could have ended up being even a worse loss. It may have came back here, but I just took that small loss. To me, the $100 really is a small loss. It's not a big loss to me, and I was done with the trade. That's it. Apple, like I said, had made a big drop that morning. It was at a top. It made a drop. If you go take a look at the bigger picture, I'm not going to actually show it here because this is all about the day trade. And I was expecting a run back up. So I ended up jumping into Apple, playing Apple to the upside. I played it in a couple other accounts played it to the upside and wrote it all the way back up. In the other account, this one, I just took the 20 cents. Other account, I wrote it all the way to my different targets, the way I like trading things. Today, this morning, on the Russell, I know it likes ranging like what we see here. It gets stuck in a range. As you can see, this is the bottom, this is the top. I usually don't nail the bottom or the top. I ended up getting into this trade around this time right here. As you can see in the middle, expecting it to go back up to here. So I was in and out of this trade within this 1, 2 candles right here, in around the end of this candle and out at the end of this candle. And that was it, And again, based on the options that I was trading, that's all I really want to do, because I know those options, they can jump around quite a bit on you, and you can end up losing a lot of money on those options. Let me just do one little thing here. That's all I really want to share, but I'm going to show you one other little thing. Let me see if I can do that, and I need to move this out of the way if I do that. Let me do that. You do see just the option chain. This was the option that I was actually trading this morning, this 184 strike. As you can see now, this 184 strike is down to 50 cents. Half the price of what it was before. That's why I say don't trade expiring options. They're not a buy and hold type thing. They're just a scalp. I use them if I'm buying for scalping. I also have another strategy where I sell these things. I end up selling, but when I sell them, I do spread trades. I sell them to spread, expecting the market not to go above a level. If I'm selling a call option, expecting the market not to go below a bottom level. If I'm selling a put, and that's a whole different strategy, a whole different call. But that's all I really want to share, and I just want to show you what I'm looking at when I'm looking at options, and why, and the reason I'm saying don't buy these options. Because again, if you're the type of person who like buying and holding stuff, that's in your mindset, that's in your head. You're going to be thinking that this market is going to continue going up, and this option is going to make you money, and this option is going to lose you money, because what you're trading is all what they call extrinsic value. Even though this option here is a 0.4 delta, but look at the price. It's a 184, and the market is it's a 184, and the market is at 183. It's below that, so all the value of this option is going to be gone by the end of the day if it's below 184. And that's another thing that you have to really understand about options. It's a game that is not for everyone. Bottom line, that's all I really want to share. That's not all I really want to share. This is Solomon, Right Side Trader. Hope you guys had a great week. Hope you guys have a great weekend. I'll talk to you later. Bye.